Welcome back to the TD Ameritrade Network. Let's talk some tech. IBM, the first to report in a string of cloud companies and those connected to data centers that maybe can do a little better in this market than some of their peers. Dan Morgan is joining us, Vice President, Senior Portfolio Manager at Synovus Trust Company. Tom White's going to do some trading with us here on these tech names. Dan, look, I don't think anybody has big hopes for IBM at this point to be a stalwart of the market, but you would think maybe they'd be able to have some insulation from the coronavirus fallout, but seems right now they're going to have to sell a story because the stock is down 5%, and the earnings once again had plenty of spots to complain about.
Yeah, Oliver, I mean, when we look at the number from IBM, like you said, coming into the report, I don't think the expectations were really big, and we know that IBM is a company that's really been playing catch up, right, Oliver? They did the Red Hat deal, last year. We were hopefully starting to see some positive impact from that. I think they're Cognitive and Cloud Solutions Group, which is the area where Red Hat falls in, was only up about 5%. Of course, they pulled guidance for the rest of the year. So I think at this point, Oliver, we can't really judge the health of technology based on the IBM number. I heard you talking before I came on about the upcoming Netflix number. I think we're going to be wading heavier into these FAANG stock reports that are going to start, obviously, with Netflix and go into the rest of the numbers next week, opposed to trying to judge the health of the tech sector based on this IBM report. IBM, as you know, Oliver, has their own issues regardless of COVID-19, correct?
Exactly, and that's what I think is interesting here, which is, how much do we read into this, Dan? I mean, IBM revenue growth down. I don't think we expect to see that for just about any other company we're going to be talking cloud with. So can we take this and say IBM is still dealing with IBM issues? Can we take this and say, hey, it may not be as clear cut of an outperformance by tech? It seems like you're citing on the issue here that this is IBM's problem.
You're right, Oliver. I mean, revenues were down, 3.5%, 3.8%. But, let's kind of swing over to the other side of the fence and look at Netflix coming out with numbers here. I mean, we would expect them to be huge, right? Based on the level of activity that we've seen in terms of downloads in regards to Netflix in the first quarter. We're looking at 30+ growth rate in revenues and earnings coming into this upcoming quarter. So I think, Oliver, you're correct in saying that we can't judge tech by IBM. We have to judge it based on Netflix and the rest of the FAANG stocks.
Yeah. Right now, does IBM have signs of development and integration of the Red Hat side that looks promising? I mean, do you want to look at the company as a downtrodden potential turnaround for a value story?
I think you're right, Oliver. I mean, when you think of the company, I think you think of cash flow, you think of dividend. If you look at the Red Hat group within, their segment breakout, it was up about 18%. The overall cloud, just cloud, not lumping in the rest of that segment I mentioned earlier, that was up 19%. So they have taken strides to move forward in terms of the cloud and the hybrid cloud. And it is a slow-moving, potentially good story for IBM. Obviously, I think it's going to be slightly derailed, right, based on what's happening here in the next quarter or two. But I think long-term, fundamentally, for your viewers out there, I think you have to look at IBM as a dividend play, as a cash flow play, as a steady Eddie play. I don't think it's nearly as dynamic as some of the other names, obviously, in the FAANG group.
Yeah, okay. Dan, I want to come back and talk some more about some of the other tech stocks here that we're looking forward to. I want to bring in Tom in the meantime, do some trading here. Tom, to that point, what if you want to approach IBM using options with more of kind of a neutral position, range bound, or something that doesn't require a big run up in IBM or a massive sell off? I mean, there's clearly some good things that they've been able to stabilize some of their core metrics. They're just not showing big growth in any of them yet.
Yeah, and the deceleration in Red Hat, which I don't think a lot of people expected, but it's kind of proven that this COVID's thrown a curveball into a lot of these results, Oliver. So I just looked at the options market. Now, earnings are passed, so you've got that event risk out of IBM besides the headline risk, right? So what I looked at was just a simple short iron condor where I take a neutral bias, but maybe skew myself a little bit to the upside where I give myself a little bit more room, a little bit better probabilities of success. And I looked at the May cycle, so we got about 24 days to expiration, really short term. To Dan's point, we could see IBM recoup into the latter stages of 2020 as their cloud business picks up. But I looked at just selling the 107, 105 put vertical. That's only $2 wide. And then on top of that, I'll sell the 121, 124 call vertical, all in the May series. You collect roughly about $1.25 credit on this iron condor. You've only got about $75 per risk on the downside per spread that you do. On the upside, you've got a little bit more, and because the call vertical is $3 wide. So you get your break evens about 105.75 and about 122 and a quarter on the upside over the next 3 weeks, Oliver. But this is a way to play IBM where you don't think it's going to move very much. The event risk is out of the stock at this point due to the earnings already occurring. And this is a way to take advantage of still high implied volatility in a name like IBM, despite the fact that the earnings are already out. So just a neutral strategy, just a little more risk to the upside, but you've got better probabilities of about 73% that short call vertical is going to be out of the money.
All right, so selling the iron condor, keeping this thing within a range that I think for IBM, at least for those that have watched the stock struggle, might be a little bit of a relief, but for anybody looking for a big move to the downside also, I mean, IBM, with the rest of tech, did bounce up off the lows. But, you know, the stock has for a while been kind of prone to trading within the range. It didn't really go anywhere for the year preceding this, just between about $120 and $150. So, Tom, I like the idea right now. I want to come back to Dan and talk some more about the ones that people are more attuned to, I think, here during the shutdown. Dan, when we hear from the likes of Netflix, Amazon, you mentioned Netflix before, is this going to be the deciding factor for whether this new bull bounce off the lows can stay intact? And we need to have big surprise beats from these companies that have done well and led the rally off the lows?
Well, you're right, Oliver. I mean, Netflix has made a huge move. We started off the quarter looking for, what, 7 million subscribers? And I think the consensus right now is 8.5 million. So that's a huge jump up. You know, I talked earlier about the interest in terms of number of downloads. So I think you're right, Oliver. There's a little bit of risk coming into this earnings report in terms of, you know, the expectations are so huge right now for Netflix, and there's been so much talk about how well they're going to do, and estimates have moved so much in terms of new subscribers. You kind of get a little bit worried that unless they blow that number away, right, 8.5 million, let's say they do 9 million, you know, but if they come in and just meet expectations, that may not be enough to substantiate this huge move, and you may see some selling in the near term. But you know, fundamentally, it's been a bit of surprise, right, Oliver? Because you and I have had conversations about Netflix in the past, and everybody is worried about competition, right, from Disney Plus and all these other things, and they were bringing the stock down, and then this COVID-19 thing comes in. Everybody loves Netflix, so it's kind of interesting how the pendulum has swung in favor of Netflix in, what, about a month?
It's amazing. It seems like I've described it as them kind of retrenching their moat here. Real quick on Amazon, are their expectations too high, the combination of cloud exposure and retail? I mean, does Amazon, are they able to deliver? Are we going to see, I mean, because they've had some earnings swings before on the amount of expenses they've had to take on to push into delivery. And I know that's been tough for them this quarter. They had delays, they had problems getting stuff out, but had to hire people. I mean, there's a lot going on for Amazon.
You're right, Oliver. I think they hired 100,000 people, right? It's a huge number. You know, but still looking for good numbers out of Amazon. You look at AWS, that was up about 34% last quarter. You would expect that to continue to do well. You mentioned their online business. You know, you have people that don't traditionally would have used Amazon that were kind of forced to use it because of COVID-19. So there's a residual effect associated with that. But you're right, there could be some expenses that go up, especially on shipping, that may kind of hit that, you know, this upcoming quarter. But you would expect the positive effect that they got in terms of people ordering from them, and you know, the cloud story is still very strong. So I'm still very optimistic on Amazon going in this quarter. But you do bring up some interesting things that we need to pay attention to, which is that shipping expense and getting everybody on board with all those new hires, and maybe that did have some impact on expenses, which you know comes down to the bottom line, even though you expect strong top line growth.
Yeah.